following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listeners out there are having a fun and a profitable end to this trading week, or this holiday trading week, I should say. My name is Mark Longo from the OptionsInsider.com, as well as many of the programs here on the old Options Insider Radio Network. And I am joined today by a veritable gaggle of options all-stars for our Option Block all-star panel, starting out with a man who appears far too infrequently on the program, the man holding down the OX hot seat today, none other than Big Rob Kurzakowski himself, making his semi-annual appearance. Mr. K, welcome back to the show, sir.
It's nice to be back, and of course, John had asked me to come on today, and of course, it's such a boring day that there's almost nothing to talk about, which is actually a welcome change for us here at OX from last year, because last year this time we were running around like chickens with their head cut off, so that was almost to the point where we were actually dreading coming into work. So we'd actually like some sort of happy medium in between the two, though.
I think Grigas only likes coming on when he can crow about his shorts. He's like, I crushed the smooths today. I'm going to come on the show. And or I shorted. Actually, no, he's actually been scary. He's been becoming a little bit bullish lately, which is a frightening sign for all of our longtime listeners. And, of course, we are also joined on the program today by the man from the mountains himself, none other than Mike Tusaw, holding down the fort in the St. Charles satellite office of Know Your Options. Mr. Tusaw, welcome back to the show, sir.
Always great to be here. Always great to be here. I love the Thursday afternoons.
It is a fun time of the week, if I do say so myself, and I'm feeling quite festive myself on this episode. Maybe it's just all the eggnog I drank before coming on the show. I don't know.
You are quite festive today, that's for sure.
Yeah, it's just one of those good days. The holiday week is wrapping up. It's been a good year. It's looking like it's going to be a good year next year, so lots of things to be excited about. And, of course, one more thing to be excited about is that we are joined yet again by the Maine lobster himself, none other than Andrew Giovinazzi of OptionPit.com. Andrew, welcome back to the show, sir.
Thank you. It is good to be back. And the lobsters are jumping.
And I don't want to jinx myself, but so far we are free of those Maine gremlins, so we'll see if we can hold them at bay for the entirety of the show.
I am hoping it's everything sounds way too good for normal. So maybe things are changing for 2012. Maybe this is our first harbinger of change.
It is well known that Maine salt air is the enemy of all things electronic. So that's perhaps
we're having spring right now. By the way,
really?
Winter is not here anymore. It's spring.
I just walked
Very
back.
weird.
I just walked back into the office here, and it was snow sleeting almost downtown. It wasn't snow, but it was cold. It was rain. It was getting about cold enough. You can tell it was almost at the point where it wanted to turn. But it's still nice to have rain in December in Chicago, as opposed to all of the other myriad options that are far more unpleasant. All right, with the team assembled and the weather outlined in our various locations, we're going to dive right into the trading block.
The trading block.
And welcome to the trading block. This is, of course, the portion of the show where we outline the enormity of the activity going down on the street today. And if you missed it today, it was a nail biter. It was just some serious size, some serious activity, some serious business going down on the street today in the close of this holiday trading week. Kick things off with the S&P down a whopping 10 handles to 1254. 1254 even, actually. I don't see an even close on the VX cash very often, so interesting in and of itself. And the Dow...
Down or up? Down or up?
Oh, I'm sorry, did I not say up? I was so lost in my own little colorful analogy there.
You really had me nervous there about my quoting that I have going on. You said that with such confidence. I'm like, man, I must have sounded like a real idiot to all my clients today with what I was telling them.
You missed this after hours move here that is just rocking the earth right now.
It is the nog. I now know it's the nog.
Yes. It's festive eggnog going here at the Options Insider HQ. And, of course, the S&P up about 10 handles, the Dow up about 62 to 12,169, the NASDAQ up 21 to 25,99, just under the cusp of 2,600, and the good old VIX cash just annihilated over the past few weeks, down nearly a third of a point to 21.15, or about 1.3% on the day. Maybe let's start there, as we are wont to do lately, because there wasn't too much going on, despite my colorful intro there. It wasn't too much going on the old street today, but except for the continued annihilation of volatility. And it has been fascinating to watch this, because for so many months now, it was just, you got to have it. You can't buy vol at no price is too high. You got to have SPX downside. Got to have it. No skew, no price is too steep to pay for that near-term downside protection in the SPX. And everyone, including us on the show here, was lamenting the fact that how could the VIX be up here? These levels are unsustainable. We're not moving 2.5% a day like we should be to justify these levels, blah, 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 blah. Yeah, and we all were talking about leaning to the downside in VIX, and some of us were, and we're continuing to roll, and ever since for months now. And it seemed like it all just finally caught up with it in the past week or week and a half or so. It's just been an aggressive sell-off. Let's just say that euphemistically right there. VIX, like I said, VIX today, I think most people, myself included, thought we had reached a new mean around the 23 to 25 level, and we're going to vacillate around there for a while. But we're pushing new lows. I haven't checked the intraday. Did we break into the teens at all, Andrew?
I got to look again. I don't think I saw on the cash. No, I don't think I saw that, but I could be totally mistaken. But no, I don't think so.
We didn't break into those levels of 2003 levels.
No, I didn't. We did have some crazy. It kind of feels like it started with the settlement yesterday, when they marked down the VIX settlement, because I think into close they were pricing that 24 straddle around $1, and surprise, 21 and change. I think 21.46 settlement price for the D's contract. And from there, it just totally annihilated everything. It's actually something we talked about at Option Pit Live yesterday, and just watch it collapse, and how the VXX is slowly is putting itself to zero quickly now, with kind of the steep contango we have with 21 on the cash and 24.70 on the Jan future. So, we have some more, especially for the VXX, we have more to decline for those guys. So we're looking for lower still.
And just kind of observing, commodity markets. Whenever you get that steep contango, it's generally not good for the spot. We saw it in crude oil when crude oil was kind of in its doldrums a while back, where that contango got really steep, and so traders were kind of pricing in that expectation that things are supposed to turn around, and it never does, and you just see that sharp convergence, and it really crushes the near month once we get closer to expiration. Yeah, and the VIX isn't the only volatility index that's been getting crushed. If you look at the OVX, GVX, and GVZ, all three of those have been, are either at the lower end of their trading range or have taken out kind of the sideways channel. So we're just seeing vol getting kind of zapped away.
GVZ is really surprising given the general downward trend we've been seeing out in gold over the past few weeks, that they're still taking that vol off out there. Does that come as a bit of a surprise to you, Rob or Uncle Mike?
Yeah, actually, not really. Yeah, I think that we have a lot of kind of year-end window dressing going on. We're just seeing this big move back to treasuries. Obviously with everything going on in Europe, bond futures are almost acting like they were in 2008. Not quite that same spike, the exaggerated spike that we had back then, but we've seen treasuries hold levels that they probably shouldn't be trading at, and that has a lot to do with obviously the MF Global and Jefferies and some of these other firms that were maybe too heavily invested in European debt. We're probably seeing Goldman and some of these other bigger players moving into U.S. treasuries just for year end. And commodities have just kind of, with the exception of crude oil the last few sessions, have for the most part just been really soft.
Yeah, combine the fact that we have it's the end of the year, light with the traditional light volume, combined with the headline sensitive market that with which we have, it's very difficult to read into too much of anything this time of year, I think.
Yeah, it seems to be that perfect storm where we have the seasonality of volatility, at least in the equity indices, not so much in the commodities, but definitely in the equity indices, where VIX usually comes off this time of year anyway, because December is typically a strong month for indices, as well as people closing out positions and just taking their ball and going home. So there's a lot of selling pressure on the old vol there, and so it tends to come off on both levels. On top of that, we have people obviously waking up and realizing last week that, hey, VIX is a little bit overpriced. So it seems a combination of all of that working at play in the equity land. In the commodity land, it's anyone's guess. Like you said, things are thin, things have been rallying a little bit, but I would have expected maybe a little more juice to stay in the GVZ, just given all the activity we've seen out there late in terms of a lot of swings, a lot of momentum, a lot of vol in GVZ, but apparently not enough to maintain the earlier levels.
Yeah, and the thing we're seeing a lot of intraday volatility, but ultimately the price is just kind of steadily moving lower. One thing that I was kind of looking at a few weeks back before gold broke out. One of the espressos I wrote about, this kind of sideways channel that gold has been in, and this wedge formation finally broke out to the downside. And it just seems, I was really expecting a bigger pop in volatility, and it didn't materialize. But given the fact that I think a lot of gold bugs have really been kind of just disenfranchised, that they're the fiat money gold bugs out there have just seen the treasury market maintain these levels, and they're just kind of waiting in the wings. They're just waiting for prices maybe to come down into the low 1500s and maybe start coming back with a little bit more of you may see prices catching a bit at those levels.
Indeed. Anything else catching your eye out there, Uncle Mike? What were you watching in a commodity land today?
Well, just from the GLD, just not a lot, quite honestly. It's really not. And gold and silver, they both had down days today, but with it, GLD's held like the high 152 area for their support level. And so I want to start to become a little bit more bullish on it. But like I said, this time of year, it's difficult to read into anything. So very much leaning towards the short-term cautious end of our marketing tagline of being long-term bullish and short-term cautious.
the old KYO, the old saw for you guys out there. Of course, yeah, there wasn't too much else lighting up the old tape today, but it's always fun to look at, whenever I'm putting together the notes for this segment, my first stop, and the first stop for all of our listeners should always be our news ticker here on the old optionsinsider.com, where we break down some of the more interesting headlines that are lighting up the tape today in the options markets, and one of them just kind of caught my eye today. A couple of them actually caught my eye today that were interesting in terms of which ones were really popular and getting a lot of clicks on them today. And one of them I just had to bring up. It's too bad Sebastian isn't here because he likes to rant about this stuff almost as much as I do. And it was a headline, I believe, out of Dow Jones that the SIBO has just one possible firm who can an analyst came out with the groundbreaking news that only one firm can really acquire the SIBO, and that is, of course, the CME. And I know the guy who wrote it over there. He's a good reporter. I think it's just a slow time of year. And I wrote it back to him. I said, well, tell this analyst, welcome to 2006, because that news has been around forever. But that's why we love analysts on this. Just another example of why we love analysts on this show, taking all the old conventional wisdom, repackaging it, putting it in their quote unquote, exclusive research report, and then selling it and themselves as experts on the space, and no one could see that one coming. I was happy to see, though, one of the more popular headlines on our site today also was why cheap options aren't always a good investment for traders. A rather basic one. I would hope a lot of our audience would already know why that isn't the case, but still, it's good to see people are clicking on that. So at least they're if they are coming in looking to buy lottery tickets, then they're reading some of the interesting headlines out there. But yeah, the rest, of course, all the VIX stuff, as well as all the latest on the MF Global. We don't talk about it that much on this show because everyone and their mother and every other outlet is talking about it, and we're not really a futures show. But just interesting headlines out there. So by all means, surf on over to theoptionsinsider.com and scroll on down to the news feed there on the homepage. You can check out all those stories and more for yourself. And now we're going to close out the old trading block and roll right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
And welcome to the Odd Block. This is, of course, the portion of the show where we break down the interesting and or the unusual and sometimes just the downright dubious options activity that is lighting up the tape today. And as we mentioned at the top of the show, wasn't a heck of a lot lighting up the old tape today. So we're actually going to pull up some, except for all that action out there in ATG, which has just been lighting up the tape. And if
massively traded. Massively traded. Huge issue. And listeners, I encourage all of you to go check that one out if you haven't already. But, of course, there wasn't too much lighting up the old tape today. So we're actually going to start off with some reviews of some past activity, including a big trade that went up yesterday in a little-known name that I think Uncle Mike likes to watch every now and then called GLD. You heard of this one?
They're the ones that make the gold, right?
Something. I think they do actually make the bullion, and they press it and they send it off to your house when you. Actually, no, they make those gold eagle coins you see on the infomercials. That's them.
Ooh.
Merit Financial. Yeah, it's the guys behind Merit Financial. Gold. Yeah, that's it. That's it. There you go. That's it.
Because that's worth their premium they tack on for them embossing and printing, stamping those coins. That's a big service they provide.
The right gold right now.
Somehow I can just envision your house, Uncle Mike, just your mattress festooned with American Eagle gold coins.
No, not quite.
You're killing the imagery for all of our listeners out there who had that in their heads as well.
I was going to go a little bit further with the actual imagery of my house. Yeah, we got there's a gun in every room.
Well, we know that. There's a fish cleaning station in every room as well.
There you go. Everything's all. Yeah, that's exactly what it's like.
Yeah, I think next year is the year for indoor plumbing. Is that what we're hearing?
No, that costs way too much.
Well, it's just too easy. Why go inside when you can go outside in January? That's
why even bother sleeping inside? That's for wusses.
Oh, there we go. See, now you're taking it to the next level. That's why we like you, Uncle Mike. You bring it to that place others fear to tread. Speaking of fearing to tread, good old GLD closed today down a wee bit, down about 0.7 of a point here to 156.04. We actually saw some interesting trading activity going up yesterday, including a size diagonal going up in GLD. We saw about 25,000 of the Jan 160s being sold for about $2.10. And then he went out a month and he bought the Feb 175. So he went out and up a few strikes for 75 cents. And this, of course, this spread is an interesting one just because A, was some decent size for GLD, and B, you don't see that many people running in to GLD right now and saying, hey, I really want to be short gamma right now, given all the movements we have going on out there, and I want to have some longer-term vol. What do you think of this spread, Uncle Mike, as a guy who's trading in and out of GLD options quite a bit? Would you want to be putting this on right now?
Well, my first question is how come he did it on this and not the COMEX Gold options? Or like, what's the liquidity comparison between the two? That would be the first question that I would ask.
Yeah, you can get off a heck of a lot fewer contracts on the old COMEX too.
I would think so. I mean, I don't follow the COMEX Gold options that closely, but that's the first thing that would come to my head just in terms of paying the contract charge. But maybe he's a commission only broker that does it that way. Maybe that's why.
It probably wasn't the client who chose it. It was probably the broker who said, "Why don't you do it in GLD as opposed to that? Let's do 25,000 contracts instead of 2,500."
That's the reason Know Your Options. We are fee based, but nonetheless. Just as I'm looking at it, I don't know if I'd want to be short the 160 calls right now in GLD. We're at the lower end of a range, and I don't know if I would want to be short that kind of premium for another 4 weeks.
Granted, this guy could have some other leg we don't know about. Maybe he has some underlying on, so he's essentially putting on a covered call here in the front month and picking up some additional upside exposure if he does have that underlying leg. We could assume that maybe. But yeah, it's just interesting. It was interesting spread, and one I wanted to highlight, not just for the size and not just for the underlying, which is GLD, which is a popular one, but also you don't see many people taking this strategy. A lot of people are actually taking the opposite. They're going at the selling the diagonal, selling the time spread, so they can get long some gamma here because everything is so choppy right now, and you need a little bit of long gamma to help you survive the swings we've been going through lately, particularly in GLD. GLD is not
no shortage of those. That's for sure.
Yeah, GLD has not exactly been a quiet issue of late, so you really have to. I don't know. If I had to guess, and Andrew, I'm curious to hear your opinion on this as well. If I had to guess, I might want to think this guy might have some, either the futures or I imagine just the GLD shares if he's trading GLD, lying around in his pocket.
Be long something. I've been actually looking at time spreads myself because of volatility is getting so darn cheap in this thing, and trying to squeak out maybe some, buying some out of the money call spreads in GLD and seeing if I can get that front month to pay for this cheapy back month. I haven't put one on yet, but I think the pricing's getting there. I don't know. I conceptually I like it. I just think it's a little too close for me. That 60-75 spread is problematic for the delta side. I have to imagine he has to own something, I think, somewhere. So
yeah,
I would think so too.
But no, that is a big call on, no pun intended, of just not having the GLD move, approaching that 160 line. It's within the realm of possibility. I don't know. I still think he's got to have something long underneath it, but I do like the time spread in general right now on there.
Yeah, if this is just a pure spread play, I mean, you've got to be awfully confident that vol is going to keep on trending lower, and GLD is just not going to move. And going into a new year, typically, the beginning part of January, it tends to be a pretty choppy time for markets, especially we've had this big risk off at the tail end of this year, and actually that's probably why we've seen this really slow December, is because you had this massive risk off at the end of November. I mean, this is a really gutsy move. This is just an outright play.
Yeah, I definitely have to lean. He has to have some other leg, probably some long underlying here to go against this. 'Cause, yeah, you're right, Andrew. It is very tight, so he's not exactly picking up a ton of vol if he is betting on vol here. And you think we want to roll out a little farther if he wanted to make a vol bet here. And he is getting short gamma, less so because he's rolling into Feb as opposed to a longer out month. So the gamma hit won't be as bad, but still he is net short gamma. He's not going to be long that much vol. So it's an interesting and somewhat head scratching of a play, which is one of the ones those are the ones we like to highlight here in the old odd block. And of course, we'll leave it to our listeners to make the final determination as to what this guy is up to. And maybe the guy who did this is out there lurking in our audience, and he can call in and say, "This is what I meant to do."
Right. Well, it's definitely kind of a savvy trade if you don't think GLD is going anywhere short term, and he wants to pick up some upside, down the road. But it's also kind of, I would say, savvy that way, but pretty ballsy too. I'm going to give him on that. So
yeah, if that were the case, I think I would just look to do a straight calendar and not put that $15 leeway, put that $15 obligation in there. I think if that were the case with me, like you said, Andrew, that does take some stones to do.
Right. I mean, I like kind of like the Jan. I was looking at like Jan Feb, like 165 calendar time spread like that, or even a sort of below that. I haven't decided really. I don't think gold, up or down $10. But I'm just looking at both of those, even trying to sell some of these Dees weeklies. That was the last thing I looked at. It was yesterday, but it's tough. That's, again, like I said, that's a tough one. So we can move on to the next one, but that'll be fun to watch.
Yeah, this is one we'll put in our review for later pile, so we can come back to it in a month or two and see. And I agree, Uncle Mike, that it is a bit of an obligation you're taking on there for whatever $1.35, whatever he's picking up here in terms of premium. I might consider, I think, rolling down to a little bit smaller, because you're taking a huge risk on that upside there that this thing just takes, well, not huge, limited, but still a bit of a risk to the upside there that this thing could take off. And given what we've seen,
especially in the headline sensitive market that we have.
Yeah.
Right. The only reason I think he did that is that ECB facility, if it's really TARP, if it's like Euro TARP, which is what it feels like, maybe that calms things down a little bit. I think that might be the trade on that. But again, it's a solid one. Let's just call it a solid block of risk he's put on there.
Solid block of risk.
On the odd block.
I like it. Maybe we'll change the name of the show to that. This is welcome to a solid block of risk. All right, and moving on to another one, and again, this is one of Sebastian's favorites. Too bad he's not here to weigh in on it because he loves these guys. We're going to do an actual review of some activity we saw a while ago here, actually, in DRI, good old Darden Restaurants. And they closed today at about nearly $45, up about 27 cents, or about 6% or 0.6% today. But what we saw, and we highlighted about on December 5th, actually, so a while ago, was we saw someone coming in and loading up, picking up about 2,300 of the Dees 50s here for about 35 cents, taking a flyer on some upside lottery tickets here on DRI. And what had happened going into that day and that session was actually in the 2 or 3 previous sessions, Darden had just been off to the races. The stock was up about 7% over the past week. So this guy was just coming in and gobbling up any upside he can get and just betting on the fact that Darden was going off to the races. And one of the reasons we wanted to talk about this one is because it was just a great example of really, really bad timing. Literally the day after we talked about this one, the stock just fell off a cliff. It opened up the next day, I think, around 42 or sub 42 handle. So the thing just gave up the ghost and never looked back. In fact, today, 44.97 is the highest it's been since this guy put this trade on, I believe. So this has just been a loser from day one. And perhaps another reason why that headline or that article on the Options Insider or that news article, I should say, about why cheap lottery tickets are useless and why we've talked about them so disparagingly for so long on this show, this trade is a perfect example of that. When you're coming in and just taking a huge flyer like that, it's pretty low on the savvy scale, A, and B, it usually doesn't work out, and this is the perfect example. This guy dropped about $81,000 on a pure flyer that didn't go his way from the moment he put it on.
I completely blame Sebastian on this too, because after hearing that rant, Grigas next day is like, you got to make sure to download yesterday's podcast, because Sebastian just went off on Red Lobster and Olive Garden, and of course that day is the day that Darden just absolutely tanked.
Yeah, it was literally the next day. See, the power of the option block and our rants. When we
that's an option pit. What we're getting for Christmas bonuses this year, we're getting a $50 gift certificates to all Darden restaurants.
Hey, you should tell them, instead of that, give me some of those delicious biscuits from Red Lobster. That's a better Christmas bonus, I would say, than any sort of. Of course, you can put your money towards that one. That might be a better investment as well. But yeah, I know Sebastian, a big fan of Red Lobster and all the Darden chains. I think Olive Garden as well. So it was always a fun one to review. And yes, we did crush it, because the next day, this guy probably cursed us the very next day. He's like, why did you kill my lottery tickets like that? I had a prayer and then it went away. So yeah, interesting to watch. And like we say, the size money This isn't that size, but it's still interesting. 2,000, 2,300 contracts. Still interesting to watch this guy. Just one of the worst time trades we've seen in a while here in the old odd block. And that is going to do it for the odd block today. And now we're going to roll right into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express Block. This is the portion of the show where Mr. Kurzakowski takes the reins and I sit back and sip on some refreshing eggnog. So, Mr. K, what do you have in store for us today, sir?
Well, today I'm actually going to talk a little bit about straddles and strangles, seeing as volatility has just been absolutely crushed of late. You know, we see a lot especially from new traders. It's kind of the natural progression. You know, traders typically will start off, unless they've been to, one of these seminars where they're pitching a specific trade, spread idea. The natural progression is buying premium, buying straddles or strangles, and then doing vertical spreads, and then moving more into credit strategies and more advanced strategies. So
I hope you at least try to discourage them from the straddles. That's a dangerous step. Many people don't get past that step because they get into that and wow, this really sucks. Options are terrible. I'm going to go back to stock.
well, what we see a lot especially with novice traders, is buying a straddle going into earnings. So you've bought all the premium, and sometimes it works out if you have a really giant earnings surprise, like we've had in the past with a few quarters with Google, where for quite a few earnings cycles that selling the at the money straddle was free money. Because there's so much premium getting built into it. And we've actually seen those traders that have been selling the at-the-money straddle getting burned the last two or three, I believe it's the last two earnings cycles in Google, where it just absolutely crushed. And then, it's buying straddles and buying strangles is not necessarily a bad idea, and it's about the timing. And just like we saw with the Darden example, if a stock's rallied a ton or volatility is really getting pumped up in a stock, you probably want to hesitate from just buying premium, buying a straddle or a strangle. What we're seeing with some of the commodities now, with crude oil, OVX has come down. It's actually it was hovering around 25 earlier today. It's come down quite a bit. Same with GVX, GVZ. And these are times where if you are a believer that volatility is probably just low because of the year end and just a lot of traders kind of staying away for the month of December because of the big moves we made in November, this would be the opportune time. And unfortunately, we haven't actually seen anybody coming in with straddles or strangles. And actually, a few weeks ago, I put out just kind of a trade idea of buying at the money straddle or in gold. And actually, volatility did not work out in that case, but luckily the market, the directional move did. So that's one of the few times where you can be wrong on volatility and actually right. So that was kind of a little bit dumb luck there. A lot of traders get discouraged because of the costs, especially crude oil. The at the money straddle is somewhere in the neighborhood of $6,000 to $7,000, which is actually not that bad because it was more in the neighborhood of $8,000 or $9,000 just a couple weeks ago. So we're this is maybe a more opportune time on a less costly scale. If there's certain equities, ETFs that you're looking at, GLD, SLV. This may actually be one of the few times where, buying a straddle isn't buying all that dumb premium. again, it's not always a trade that works out for traders, and usually it's timed poorly. But it is an idea, especially because we don't know where the market's going to go. As we mentioned earlier, there's the EU bailout, which is kind of looking like more of a Euro TARP type of situation where it may lead to really slow growth, which could lead to more downside. Or if we actually see some stability there, we could see some explosive upside, especially crude oil is really tempting. Right now we're kind of at a range where 102 on the upside, 94 on the downside. If it breaks either one of those levels, the market does have the potential to make substantial moves.
It's funny. I think I don't mean to cut you off. I'm just saying. I think I'm just in general a little bit more down on straddles than you are, at least for the retail audience. And maybe this is a good point of conversation we could have here, because I think it was just last week I disparaged someone on the show because I think it was an article on Bloomberg or Reuters, one of those, where one of the people in the article was recommending straddles for retail, and I always say, at least for myself, if you're going to recommend particularly long straddles with retail, you have to have some follow up there where either you get into the gamma scalping discussion or you really take a long discussion of the management of that position, because 99% of your retail guys are going to come in, they're going to buy that straddle for, let's say, whatever, $4, $8, and then they're going to just wait for the underlying to move $8 in order to make their money back. And there's a lot that goes into making a long straddle profitable rather than just waiting for that. So like I said, maybe these are discussions you're having with people where you're saying, hey, you need to learn about gamma scalping, or maybe do you do that with them? Do you say, here, let's talk about how you can make some money in the interim and kind of defend yourself against decay here? Or do you say maybe these are points where you unload one side at once? Maybe, I think for a lot of retail, their version of gamma scalping is, the stock runs, they take off the call portion, and then the stock drops again, they have to take off the put portion, and they try to scalp it in that sense. Is that what you guys talk about over there? Or what do you say when you recommend to someone, hey, pick up a straddle? What kind of management do you add with that?
Well, yeah, I mean, it's certainly a position that has a little bit more maintenance than, say, like a vertical, bull call spread. You're hoping to hold that trade very close to expiration, whereas a straddle needs to be managed a lot more, and that's another kind of pitfall that we see is, people put on the straddle, the market will run, and then eventually the market just kind of slows up, and they still have both legs of the straddle on. So knowing where support and resistance is very important. If you don't see any follow through at those levels, it may be time to take that leg off. If you see that, you put on an at the money straddle in crude oil, for example, and you see that the market tests 94, it doesn't break through, and you see some sort of indication of a technical reversal, spinning top, a key reversal type of pattern, it's probably time to take that put portion off. Also, if you see a sharp move in volatility, selling against the position is not a bad idea, and it's a way to limit the cost and eliminate some of the costs of that trade, because straddles and strangles are very expensive. So yeah, we'll go through some of those scenarios. Obviously, different traders have different risk tolerances and different knowledge base. So with some more sophisticated traders, we'll go into a little bit more of the gamma scalping discussion and how to really micromanage the position, really keep an eye on the skew and things like that. Where somebody that's relatively new will kind of focus more on chart support and resistance. This is probably when you need to take that off the call. This is probably where you need to take off the put, and just kind of go through some scenarios, because you don't want to see somebody just simply throwing away money at a trade, because if you don't know how to manage a straddle, all it is doubling down, not knowing where the market is going. So I mean that's the simplest way to put it. But it basically, you're saying that I think that this is going to move. I don't know what direction it's going to move. I'm just going to put, instead of, one stack of chips on the table, I'm going to put 2 stacks of chips on the table, and it just doesn't pan out. So, yeah, I mean, that's one of the things that we do here at Options Express. We do try to, first thing we try to do is recognize where they're at as far as knowledge of option trading in general. And trading level isn't always an indication, because there's some people that are trading level 5 that have just been trading options for a long time, may not know a lot, where if somebody that's really sharp and has only been trading for a year or two and can't get that trading level without an exception. So we try to gauge where they're at, and then from there, we can't obviously advise, but we can give you hints and what if scenarios. So that's what we'll try to do with customers.
I look at trading. I'm happy buying or selling premium. The only thing I know is when you buy straddles or you buy juice in general, for the most part, you kind of break even. And if you have to accept that as a concept, I think, when you buy juice in general. The idea behind it, though, is if you're consistent with what you do, you break even, you might lose a little money on a bunch of them, and then one of them is going to just be gigantic. And I think that's the way that I always saw trading long premium in general, but you have to understand how to manage it. So I think if somebody doesn't get that you have to actually manage it, it's probably not the position for them. Because what people see is they see it going against them, where they perceive it going against them, but it's actually not. Where you have enough underlying activity, right, to finance the straddle, but they are not doing anything, or they're not getting it. But I go, no, you really, you have enough movement where you can make money on this thing, but it goes up and down and it ends up unchanged for the day. Yeah, but you had like a $4 range where you could have done something in between. So, if they don't understand that stuff, it makes it's not the thing for them. But you have to be able to trade it, and you have to understand how to trade it, which brings in a whole host of knowledge that most people don't have when they start. It's easy for people to look at a put and sell it, and they just watch it go down because they don't have to do anything. It's hard when you hand them a bunch of premium to own and say, now you have to manage it, and they look at you like, you're speaking, well, Greek. So
yeah, defending that long premium is definitely an onerous task, even if you're skilled at it, let alone if you're coming to it for the first time and picking up.
And there's timing, like you said, timing is everything. When that implied volatility is cheaper, that's when you start looking at it. You have to be cognizant, and that's, obviously that's one of the things we teach at Option Pit, but we want people to be cognizant of the levels they're paying for this stuff, because it makes a difference. But I think you can make money buying premium as long as you're smart on how you buy it, just as you can make money selling premium as you're relatively smart in how you sell it and how you manage the risk, right? Because there's two different sides. You buy juice, the risk is, okay, I'm only going to lose so much on decay, you decide, and then you call it quits and you go to the next one, right? You break even. When you sell premium, you have a different idea, right? You have to manage the risk of that short contract. It's a different type of risk to manage than owning premium. So they're just, they're two different sides of the coin, but you don't discount. I think the problem is people buy straddles at times they shouldn't be buying straddles, and that's the biggest problem.
Yeah, the buying going into earnings is definitely, if you're taking that route, then by all means, just hand your money away.
The fourth quarter 2011. That's when it kind of worked. Okay, I'm going to buy this straddle, and Amazon. Oh, I made $20 on the straddle because stock's down, $35. That's the time it worked. It doesn't always do that, but it worked that quarter. This
past maybe Q4 aside, because it's a bit of an aberration there. But in general, that's a difficult road to hoe. And I always have this knee-jerk reaction to long straddles whenever I hear people talking about them, just because for so many years, even going up to launching the Options Insider as well, is just that was the pitch. you used if you wanted to lure in retail to your quote unquote service, which is usually a scam. It was that same pitch you saw all the time, late night infomercials: make money in any market condition using options, and that was the pitch. You didn't need to have any skill, you didn't need to have any luck or timing or any sort of risk tolerance or risk parameters. Just buy these straddles and you can make money no matter what happens. And it was a pretty successful pitch for a long time, and it lured a lot of people to the dark side. So it's always interesting to hear straddles in that context.
Well, even in the past where I've been in between jobs and a job seeker and looked at some of the prop shops, even to those of us who've worked in the industry, the pairs trading was always kind of churn, or kind of a way for prop shops to try to lure in traders. Look, you can just you can pairs trade, just hedge just scalp the crap out of these two stocks, and then it doesn't work unless you actually fully understand the strategy. I think that even on the premium sellers, we see a lot of that on the retail side. People just sell strangles, and they're way out of the money. And then you have a huge volatility move, crude oil, where you're $10 away from your strike price, but you're on a margin call and you're getting squeezed out at really expensive prices, just because a lot of retail just doesn't gamma hedge. They don't understand the concept of, you have to actively manage this position. It's not just sell this and then come back into your account a month later. As long as, the world hasn't blown up, you're all right.
Well, Rob, I think you brought up an interesting point today, and you dove into the straddle fire, and I commend you for that, because it's definitely an interesting position to take and one to discuss. I think we could talk about it endlessly on this show, as we have done in the past. I think we did it last week when Grigas was on here. We dove into the whole straddle conversation. As you can tell, it's very much a hot button issue for me, but definitely an interesting one to discuss. And I'll look forward to seeing how you guys discuss straddles going forward in your newsletters, and what we could incorporate onto the show in terms of discussing, because indeed the long straddle is such a tempting strategy, and yet also such a perilous one for those newcomers coming into the biz for the first time. All right, that is going to do it for the Xpress Block today. And now, because we did go so long on straddles, we're just going to roll right into Around the Block.
Around the Block.
And welcome to the Around the Block segment. This is, of course, the portion of the show where we discuss what's catching our eye, what we're watching on our individual screens for the coming sessions. And as we alluded to at the top of the show, not a heck of a lot really lighting up our screens this time of year. We talked on the show earlier this week about watching out for the holiday coming out of the week. And it looks like if you didn't take that advice and you did indeed hold some premium going into this part of the week, looks like you already paid that weekend toll. Would you agree, Andrew, that the bulk of the weekend has already come out here?
Yes, I think they definitely they took their chunk out. So if you didn't sell it yesterday, you've already sold Monday and part of Tuesdays by tomorrow morning.
Yeah, so if you're coming in looking to hit some bids before the weekend to prevent that decay, then you're just giving away weekend risk for free.
Pretty much. You're going to go, why do these options move this weekend? Because you sold them already.
Maybe I should add that to my top 5 list of mistakes of option shares. Maybe make that number 6. And people coming in looking to defend themselves against theta and hitting bids on Friday afternoon, or even late into the week on these types of holiday weekends when everyone's already gone away and the market is pretty much closed for business in all but name this part of the week. They're coming in and hitting bids, and of course, like you said, giving away risk for absolutely no reason and no reward whatsoever. So yeah,
if you didn't know anything about options, you would think it's a great strategy. I'll just sell them on Friday and buy them back on Monday and just pocket the decay. It sounds great, except that they've been trading them for 35 years, and I think somebody figured that out.
Yeah, it might have worked like 1983, 1984, maybe around
great
that
strategy.
time frame.
It was a great strategy for '83, I think.
Well, I always get a chuckle when Sears Holdings obviously been a stock that's been in the news quite a bit because of the spinoff and the fact that you can't really get out of your old adjusted options. But the selling the box spreads on Shield has always been kind of nobody's thought of this. I found this great strategy. I'm going to sell this premium or this box spread over parity. And then you realize that the stock is also at a 40% borrow rate, and there's a pretty good chance you're going to get assigned and bought in.
Yeah, you're giving away all that risk for all that carry for nothing, or for a substantial discount to what the market is already pricing it in for. Yeah, we see that.
I can use that as an example now for my classes. I'm always looking for those.
We used to see that every now and then in the SPX. Some guy would come in and thinking he had figured out some box that no one else knew about or saw, and that he had some great rate to lock in. And it was always the same thing. They would try to price up some ridiculously deep box, and you just laugh at this guy who's who obviously has some capital because he's trying to trade size in the SPX, yet not at all sophisticated to the product he was trading in. You had to kind of just scratch your head at how some of these guys got to where they were and whose money they were trading, and if indeed you should call them and tell them to stop letting them trade their money, because obviously they were not exactly very high on the old options savvy scale. So yeah, I didn't realize Shield was the new box trade for 2012.
Well, it has been for a long time, and it's been on the fail list for a long time for CNS, meaning that that there's a ton of buy-ins on it, and I think that there's one very, very sizable shareholder in Shield, and those shares are not easy to come by as far as lending. So the put premiums are pretty outrageous on Shield, and they have been for 2 or 3 years now. You always kind of wonder, what's going through the trader's mind. Like your, Dell Optiplex 170 has spit out this trade idea that, these hedge funds with their supercomputers haven't figured out yet. So, yeah, I mean, we try to discourage people, especially a lot of those traders that thoroughly understand boxes generally don't get into those spreads unless they're somewhat hedged on the outside. Whereas, we see a lot of novices just try to, dive in with put the account all in on this box, and that's something that we have to kind of talk them out of and explain the risks and the assignment risk, and it's not always an easy thing to do. Not
just that, you need some pretty hefty margin setups to really take advantage and trade boxes effectively. You need to have a professional account with professional margin. I'd imagine it'd be hard to do with an OX account with the retail. I mean, you could do it, but I think it's a difficult spread to manage and execute effectively and make the most money off of if you're doing it through a retail account with retail margin, I would think.
Well, and one thing that our risk group is very aware of that, and you get scaled up requirements. You get locked out of trading a lot of these boxes where you have to call in. If the spread's trading over parity, you have to call the spread in. And that way you get the spiel from us, and we try to walk you off the ledge and and tell you not to get into that spread unless you absolutely know what you're doing.
I like that. They make you call in so you can get the stern talking to. And speaking of irony, I just happened to look at I'm looking at Sears Holdings, the ticker, while we're talking, looking at the news and the charts, and the top news for Sears Holding today is about Boxing Day. So there we go. So that brings it all full circle regarding the Sears Boxing Day sale is starting early. So get your boxes in Sears now, because there's a sale going on in boxes.
Well, if you're looking for juice to sell, I mean, geez Louise, that is definitely an interesting play there. It's at pretty much looks like 52-week highs, close to it.
So you're saying buy, take two, sell, Shield. That's the Andrew pick of the week.
Yeah, I know that's going to be a tough pair. Let's just say.
Yeah, they don't really move in any sort of correlation, but it's still intriguing nonetheless. Pick up some vol and take two, short some vol in SHLD, and then
No, I'm still waiting for my take two. I've got my bid in, and it's just floating there waiting.
It's mocking you. Did you get it? Did you dive into Activision yet?
Not yet. I'm a watcher first for a little bit, but I do like that idea.
What fun is it to watch when you can just dive willy-nilly into it instead and learn that way?
Well, I used to do that when I was 25, but now that I'm 45, I tend to take a day or two to look at stuff.
You have enough scars on you to have learned your lessons.
Yes, kind of like the Terminator, with just all those bullet holes written in his body is written with bullet holes.
And Uncle Mike, what are you watching for the remainder of the week and going into what will likely be a very slow final week of the year?
I'm watching bowl games. Oh no, just kidding. It's like we were talking about a little bit earlier. This is a very slow week a lot of times, and I'm hoping that I don't have to do too many adjustments next week. That's my goal. I'll be watching the markets every day, just as per usual, but I'm hoping that I don't have to make a lot of adjustments based upon the movement next week, just because it's something that, like I was saying earlier, you really, there's just a lot of crazy things that go on, and because it's such light volume typically next week, I'm just hoping that it's a nice, good, boring week, and that the BBI can be whatever I need it to be, if that makes sense.
I was just going to say, you're hoping for a nice high BBI ratio to finish out the week there, or finish out the year there.
Now, how does it work again? If it's a high BBI, then that means
if it's
I get
high,
to go to the bathroom a lot.
you're getting to go a lot.
BBI,
yeah.
Then
if it's high, then you got nothing else better to do than take a few trips to the old loo every now and then.
But if it's a low BBI, then I better have a cup right by
If
my
you're low
desk.
BBI, then you're stuck to your screens and sweating it out profusely.
All right. Well, that's good, because in the outhouse at my house we have Wi-Fi, so we can handle that.
There you go.
Whatever it may be.
You've got a leg in 2 centuries there, I see.
That's right.
All right. And with that beautiful imagery of Uncle Mike in his outhouse with his Wi-Fi, we're going to close out the old Around the Block segment, and that's also going to close out this episode of the Option Block. I want to thank all of my partners in crime for joining me on the old program today. And starting off with you, Mr. K, what is coming up in the land of OX that may interest and or intrigue our listeners, aside from the big eggnog party that is sure to go on very soon?
Well, I've been hinting at it for some time here, but we finally got approval from the App Store at Apple, and our iPad app is out. So those of you that have
Hallelujah.
an iPad or an iPad 2, you don't have to get the ridiculously resized version of the mobile app. You can actually get an app that's made for your device. And
it's been so long. I think you plugged that on the last time you were on, that was what, like in February?
Yeah, and well, I did some bug testing for it, and I have to say it was like mid or the tail end of summer, and there was one minor bug with like the transition from the accelerometer where one of the pages would, if you just opened up the app in portrait, the news section showed up kind of weird, and then you had to rotate it and then rotate it back, and it was fine. But that bug fix was fixed in like a week, and unfortunately we submitted it at the same time that the iOS 5 came out, and Apple had to put out that fire. So
yeah, everyone and their mother was waiting for approval then on all their updates.
So yeah, we had to wait through the long, arduous approval process and sit there, have our IT guys just sit there and clicking the refresh button on their email for ages, trying to wait for that to finally get approved. So it is out, and it's actually really snappy. Now that the app is out, we're going to get the feature request for it, and no streaming charts as of yet. We do plan on adding those, although we have to figure out a way to do that with Apple's technology, because they don't support full Java like your desktop computer does. So we're going to have to, our IT guys are going to have to figure out a way to give you that streaming content without using their Apple's backbone. And other than that, it's going to be kind of a quiet few weeks here. No live events. We do have a battery of webinars starting next week that are a good refresher webinars, very intro stuff, intro to options, intro to trading options in IRA. And just after the new year, January 3rd, we're going to have the monthly futures outlook from Jim Wyckoff, which is always a good some good information in there for our futures traders.
All right, sir. Thank you for that. And I know all of our listeners who remember your plug of the mobile app from the last time you were on can finally get their hands on it. So that'll be fun. I'll have to download it myself and kick the tires and check out all the new bells and whistles. It'll be nice just not to have to do portrait mode and to not have to do that ridiculous 2x whenever I want to do something on the old iPad. So thank you for that. And Andrew, aside from the big company Christmas party at Red Lobster, what else is coming up in the land of Option Pit?
Well, our big sale for gold, silver, platinum courses ends today at Option Pit, but it ends tomorrow. We don't have much.
I was going to say if you end it now, it won't go up until tomorrow. No one will have a chance to get their last minute. You should extend it one day if it does indeed end today.
Option trader, yes. Marketing guy, no. So. Yep, tomorrow it's until tomorrow. Quiet week. Next week we'll just be doing some pit reports, but no real big client interactions next week. And we're going to launch a small little ebook. We're going to start putting out a little more content, 2012, but nothing. I think we're doing something with the Street in January. We'll be doing a webinar with TheStreet.com's options profits. And we do have a couple things cooking, not ready to announce yet, but we're getting excited for those too. It will extend our footprint a little bit, so to speak.
Interesting stuff. And last but certainly not least, Mr. Tusaw, Uncle Mike coming back from the outhouse one last time. What is coming up in the land of KYO, sir?
January, we have a variety of webinars that I'll be on the Options Express platform. They have been gracious enough to allow me to be a guest host or be a special guest. I believe Nina's going to be hosting 2 nights, and Jim Roseanne will be hosting one of the other nights. Go to the Options Express website and the Education Center for more information on that. Know your options. Probably around the first or second week of the year, we will be starting to unleash our more detailed webinars to the public. So for more info on that, sign up for our newsletter at knowyouroptionsinc.com, and we'll keep you informed on that. A side note, Merry Christmas, everybody.
Indeed. Of course, we do want to extend some holiday season's greetings to all of our listeners out there and to everyone who's joined us over the past year or year plus now that we've been doing this show. It's hard to believe it's run that long, but it has. And so, yes, thank you to all of you out there who have downloaded and streamed and subscribed to the program and made it such a success over the past year. And, of course, we'll be here next week, at least towards the end of the week. Monday is a holiday, obviously, so we won't be most of us will be off, so we won't be doing a show on Monday for Tuesday, but probably later in the week we'll do one last show on Thursday to kind of wrap up the year, a year-end spectacular, if you will. So look forward to that. And again, thank you all of you out there for downloading and streaming and subscribing to the show and making it such a success. And have a great holiday weekend. And we'll see you all one more time before the end of the year right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.